Welcome to the last panel of today's excellent forum. This is a panel about the rest of the world. And this is a panel about the fact that the rest of the world actually counts. In not just the digitalisation of markets, but in FinTech more generally too. Digitalisation in FinTech is not limited to being a North Atlantic concept. This is a panel not only about where, but also about why, and how why changes where you are. To talk about the where, the American Banker magazine found this year that 5 of the top 12 countries with the most FinTech financings this year were outside of the EU, the UK, and the US. According to the Bank for International Settlements, investment in FinTech has substantially increased in China, India, Canada, Singapore, and Australia. S&P reported this year that Africa was the only region to register an increase in FinTech VC investment, and Africa will be, according to Boston Consulting, the fastest growing region by 2030, together with Latin America, leapfrogging incumbents because of the adoption of new technologies. Well done. Data and people are everywhere, as is the money and the ideas to drive change. There's also a why we'll be talking about today. Digitalisation is done differently in these different faraway places and for different reasons. To paraphrase a recent Boston Consulting report, the drivers shaping the space perform differently across regions, determined mainly by differences in available funding pools, sources of talent, local regulatory postures, and technology adoption. As noted by the World Bank in its excellent FinTech and the Future of Finance report, and I totally recommend you give that a read, this year, financial technology thrives where financial systems are less developed. This emergence of digitalisation to leapfrog the more common development path has only been accelerated by the COVID-19 pandemic. There is so much to discuss in this area of the where and the why, and I have the privilege of the very best people to do it. I have Rehan Ahmed, General Manager and Chief Product Officer at Marketnode, Abena Amoah, Managing Director, Ghana Stock Exchange, Waqar Chaudry, Executive Director, Innovation and Digital Assets Product, Standard Chartered Bank, and Akinchan, Manager, Head of Asset and Liability Operations, World Bank Treasury. I welcome all of you here from our faraway places from which we've come. So, for each of the panelists, just as an introduction, I'm going to ask them one question in turn, and then we're going to turn into a rabble as we try and answer one question together. The one question, and I'll start with you, Rehan, on this question. What is your perspective on the digitalisation of financial markets, and how and why is this happening in the world where you work?
Sure. First off, good afternoon, and thank you, ICMA, for having me here. To start off with, Scott, let me define how we look at digitalization and what it means to us, right? And there's another term that's bandied around, which is digitization. The way we look at digitization is that it's a manual process that is now done using bits and bytes. So one example could be you used to write a letter to someone, but now it's actually an email. When you look at the concept of digitalization, it's taking that a step further, right? Which is, how does something that exists in bits and bytes actually enable a new business model, right? So let me give an example that is completely unrelated to finance. Back in the day when I used to go on holidays with my family and used to develop film rolls, right? I'm probably showing my age here. And you think about the settlement time for things like that, it is T plus 2 weeks. The moment you actually move to what are they called? JPEGs, right? Think about the settlement time concept. It actually compressed from T plus 2 weeks to get your rolls developed into T plus 0 instantaneously, right? And that's how I would look at the power of digitization. Digitalization to me is actually the next leap, as I mentioned. So the fact that I can now produce photos at any given point in time, effectively have T plus 0 settlement, how does that actually enable a completely new business model I did not have, right? And here you can think about Instagram and the rise of creators, right? So likewise, when you look at finance, and I'm based in Singapore, as Scott may have mentioned. Let me talk about two markets that are quite further along the digitization trend, but not so much digitalization, right? The first would be fixed income markets, which we're all here to speak about, and the second would be the funds market. Broadly, Asia fixed income markets, when you include the local currency markets, hovers around 15 to 16 trillion USD. But the offshore bond market is about 1 trillion USD. A lot of the effort that's gone in so far, and that's working with technology partners, be it ourselves, be it partners like Covalent, be it now CM, has really gone into the digitization of the issuance process for bonds, right? And when you look at some of the landmark transactions that have happened in Asia, like the Hong Kong government bond in March of this year, it's really focused on digitization, right? What I've not seen in the bond markets in Asia so far, except for one example, is how this actually enables a completely new method of distribution, right? We're in very early stages of seeing some examples happen in Thailand, which are very retail focused. So essentially, how do you give end users wallets through which they can access tokenized government bonds? We actually see something quite similar happening in the funds market as well. And over there, the power of digitalization, as I define it, is a bit easier to see. Fund markets in Singapore, our regulator, the MAS, their stats show there's about 4 trillion of assets booked in Singapore under funds, right? And their challenge has really been, how do you get the entire market speaking to each other over common rails, right? So we're actually seeing the same thing happen in Singapore and Hong Kong, which is they're setting the right rails for digitization of funds. Because today the communication between someone who buys a fund, the transfer agent, the fund manager themselves is actually quite broken. But when you look at the cost of distribution of a fund to a retail investor, to an accredited investor, to an institutional investor, it's actually quite high, right? So I still think that Asia, there's been a lot of noise on POCs and live trades done. I think when we think about this in innings, in baseball terms, I still think we're at the second or third inning, with the next leap to be digitalization.
Thank you very much. What's your perspective?
Thank you very much, and good afternoon to everyone. I'm from the Ghana Stock Exchange, and we run both the equities and the fixed income market in Ghana, as well as co-chair of the African region for ICMA, and I'm delighted to be here. For us, 15 years ago, I don't know how many of you in the room know that the start of contactless payment systems started in Africa. In fact, in Kenya, to be exact, 2007. And it came to resolve a need. So I went to the shop yesterday. I was buying something here in, not far from here. I said, oh, show me, can I pay? Where's your QR code? I just went to do what I do every day in Ghana, which is I stop at my grocery next door, and I just point my phone, my camera, and I scan their QR code, and immediately, within a microsecond, payment happens. And they're like, what is a QR code? We don't have that here. I'm like, wow, okay. So you guys are a bit behind us. But in 2007, developers in Kenya resolved a very important challenge we all had. If my dad needed to send money to my grandmother, we went to the public transport station, found a trusted driver, put money in an envelope, labeled it, and then called someone on a landline, meet this bus that's leaving at this time and collect this money. And it will take you weeks to find out that your money didn't get there. But banks were not set up to provide payment systems across the length and breadth of our countries and for our poor populations. And Kenya came up with this solution that enabled us to use our cell phones to essentially transfer currency across. In 2009, Ghana went on the same platform. And there, our central bank tried to work with a telecoms company to facilitate financial intermediation because KYC was difficult, banks didn't have branches everywhere, etc., etc. And the banks just frustrated the telecoms companies so much that our central bank said, telecoms companies, here is the license, go and do it yourself. And essentially, the telecom companies, at the time in 2009, we had about 1.5 million bank accounts for a population of almost 30 million people. 1.5 million bank accounts. The telecoms figured it out, and within 5 years, we had gone from 1.5 million bank accounts to 5 million mobile money accounts. That's what we call them, mobile money accounts. In 2018, because all the telecoms companies were developing their own systems, our central bank stepped in and said, there has to be interoperability, and invested in a system that allowed all the telecom companies to speak to themselves. Today in Ghana, for a population of 33 million people, we have 64 million mobile money accounts. Double the population. Many people have double, treble businesses. Essentially, this system has become a store of value. I pay my staff at home through their mobile money accounts. On the back of that, we have issued biometric cards, national ID, biometric eye, fingerprint, everything. Because of the popularity and the extreme use of this system, I almost don't even need a KYC anymore. As I transact, all the data about my payment habits, my receipt habits, it's all going through here. What time I like to send money, what time I like to make payments. And in fact, today on my phone, I can go there and apply for a loan, apply for a pension product, or make a savings, pay a business, and it's led to an e-commerce business. So for us, it's really about financial inclusion. But just as Rehan said, we are moving from financial inclusion to value creation. And it's the products and the services and the funding that we are now bringing to others that is really the driver of change in our markets.
Thank you very much. And that very clear answer of the question why, which led to the how. I've heard that asked a number of times earlier today. Why are we doing this? What problem is this a solution to? You can see already that in other markets in the world, I won't say that this is a privilege or a luxury, but if you have a really bad problem, digitalisation is then applied with a very clear focus. And actually that description very accurately described the network effect of it taking off, and then the breadth of network effect. Aki, this leads into you. So surely, I mean, why would the World Bank be interested in digitalisation? What possibly could be the reason? And what's your perspective?
So,
You got it.
So Scott, at the World Bank, our vision is a world free of poverty on a livable planet. And so the way we do that is we provide lending and technical assistance to middle and low-income countries to finance projects that promote sustainable development in areas like health, education, infrastructure, and the like. And if you look at technology, right, technology has had a transformational impact in development over the last 20, 25 years. I've been listening to you, and I had similar experience growing up in India, where at that time it used to take, 10 years to apply for a landline phone connection. And now it takes seconds, and everybody has a mobile phone, right? So it's just leapfrogging from you used the term a few times, Scott. And similarly, if you look at, in the field of education, where earlier, children, still today, children don't have access to education. But now with the use of mobile phones, you can stream lectures from MIT, great equalizer. If you look at healthcare, where a lot of people still have to walk for, tens of miles just to see a doctor. Now you can do that consultation over the phone. And so a lot of progress has been made, right? And against that backdrop, I find it really remarkable that in the field of work I chose to have my career in, right, which is fixed income, debt capital markets, the way bonds are issued, the way bonds are settled, the way bonds are serviced has not changed much in the last 20, 25 years. And some of the earlier panels today talked about this, but if you think about sort of pre-trade, it starts off with a term sheet where we get a term sheet from a dealer, we review it, we give a mandate, a final term sheet comes in, we reconcile that, we book that trade manually in our system, so we are digitizing that from analog to digital. And then from there on, somebody's reviewing all that to make sure it reconciles. We then produce, the legal teams prepare a final terms document independently. That gets reconciled. All of that then gets shared with the paying agent and calculation agent, and it's very important, right, because we want to have an independent calculation agent which is coming up with coupons in the interest of our note holders. All of that is done independently. Then from there on, it goes to the ICSDs who replicate that process. And now, if we wear the investor hat, right? So at the World Bank, we manage assets for 60+ central banks and official institutions. So we're buying dozens of bonds from several issuers every day, and we don't have that capacity to review every single one of those manually, right? So we are then importing data from whether it's Bloomberg or Reuters, and I'm sure that process is independently done as well, right? So just reflecting back, the processes we have today in fixed income capital markets, they've been designed with a heavy focus on accuracy, right? When was the last time an investor received a late payment or a wrong payment, or let alone where a payment went missing, right? That does not happen. So in the morning, there was some discussion on why fix something which is not broken. So yes, it is not broken in the sense that it works, it's accurate. But all of that accuracy has come at the expense of efficiency because everybody is doing that over and over again. We don't have a golden copy of data, right? So at the World Bank, we have always felt that there's, capital markets play an instrumental role in mobilizing savings from the richer world, from the more affluent world, right, towards development, towards, in low-income countries. And so with that sort of in mind, back in 2018, Scott, we had worked together with you. At that time, it was the first blockchain bond issued in Australia. And after that, there have been many proofs of concept. But what we found, what we heard consistently from our stakeholders, from our investors, was that what's important is to move beyond proofs of concept and look into something which is scalable. And so that's where we partnered with our colleagues at Euroclear, with Citibank, and with TD Securities. So in October, we issued a digital bond on Euroclear's platform. It addressed many of the things which have been talked about today, so we were able to settle from issuance to settlement in a matter of 4 hours. The bond is scalable in the sense that it's on the Euroclear platform, so most market participants are on Euroclear's platform. We were able to issue under English law. The note was listed on the Luxembourg Stock Exchange. And another topic which was discussed this morning was around repo eligibility. So Euroclear is a tri-party collateral provider, so the bond has already been pledged many times over since issuance. So very excited about the prospect of digitalization in capital markets.
And thank you for the free plug for me there. That was great. Thanks for that. One thing I would say from my experience in working with Aki all those years ago, it is incredibly powerful to have both an understanding and an eagerness for new technology as well as experience and expertise in the old way of doing things. When I have a conference of this type with the other side of the market, with the FinTech side of the market, we talk about the fact that they don't understand the market they're disrupting. Working with the World Bank is great because you've got the FinTech and then you've got the incumbent all in the same person. That's Aki. So, Waqar, what's your perspective on this?
I feel like I'm in the middle of all you guys and we all work together somehow with the bank. I think we do, pretty much across the whole bank. So good to be here. Thank you for having me on the panel. So I work for Standard Chartered Bank in the institutional banking side. However, I'm part of a virtual team for digital assets that spans all areas. And I see retail and institutional business initiatives that are related to digitalization or digitization of assets and movement of assets when it comes to new technologies and working with FinTech. So as a bank, our DNA goes back to 160 years where we're the Standard Bank of Africa, while we're also the chartered bank of Far East Asia. We used to run the monetary system back then, over 100 years ago. So literally in our offices right now, we have ledgers that actually sit over 100 years old that had two-way accounting, right? So we have that. And now when we look at the markets that I and my team actually operate in, we have security services in stock exchanges like Ghana Stock Exchange and the regional African exchanges, as well as in Hong Kong Exchange, Singapore Exchange, where we are doing T+1, heading to T+0 in Hong Kong because of the northbound stock connect, because of Beijing. So we see all that from left to right and everything in between. The majority of the issues that we've seen so far is back to what was discussed before around how digital assets can move faster, they have a quicker turnaround, etc. But if you can't pay for them, within the same day, there's no point, right? So you still go back to T+1, the same risk carries over. Treasury operations have the same risk carryover, et cetera, et cetera. So as a bank, we are actually watching out and participating in experiments as well as going live. So we were one of the first banks to go live with the CBDC in Africa, eNaira, right? We're also in HKD in Hong Kong. We've just announced our CNY CBDC pilot with the Chinese government. So we are doing CBDCs globally wherever we can in our footprint. The other thing we're also looking at is how do we facilitate some of these digital assets from a payments point of view that are non-wholesale CBDCs. So things like stablecoins, tokenized assets, which are cash equivalent if they have AAA plus rating, et cetera. And also tokenized deposits if clients want to put money with us. So, and I think you guys are involved in one of the conversations we're having on that as well. So from a payment side on the DVP or the delivery versus payment, we're quite heavily emphasized at the moment in the payment side. Because without a bank providing those services, none of the digitalization works unless you bifurcate away from the financial markets, right? So from a trading desk point of view, from a custodian point of view, from a payments processor point of view, from an FX desk point of view, across the whole spectrum and the wealth management platform and our retail clients, we are looking at digital assets across all those areas at the moment. The lessons we've learned in terms of the markets, so, I mean, I'm based out of London, but the wider team sits in nearly 40 countries and we've got access to 100 different countries around the world in terms of product dispersion. The main thing we're learning is that the incremental benefit of inclusion of digitalization is much faster and much greater in Africa and some parts of Asia because they don't have legacy systems to deal with that actually are well embedded. So if you look at European countries as well as North America and Australia, for example, it will take a lot more effort to gain the benefit and a longer period of time, the return on investment, if you want to really equate that to something more tangible. But in countries where the infrastructure is a little bit disjointed, things like mobile wallets, mobile payment, and even Thailand, the way they actually want to settle digital securities, there's a significant uplift in productivity compared to more developed economies. So we're going to be part of that. I mean, we think that over the next few years, Standard Chartered will have a significant amount of role to play in digital assets, both on the payment side as well as settlement side. So in Dubai, we've announced in May, our CEO announced that we're going to be launching a digital asset custodian, starting with cryptocurrencies and increasing that to other digital assets, which includes also settlement on-chain for various assets. So, I mean, from a bank point of view, we're there, we're helping everyone where we can, and in this panel, this is a perfect example. We have lines with all of you guys one way or another as a bank.
Thank you. And actually, Standard Chartered, you are involved. Something that happens in the Indo-Pacific in relation to the use of this technology in payments is there's quite a high level of testing of cross-border, which is really super hard in a fragmented place like the Indo-Pacific, and Standard Chartered is often involved in those projects. I can think of two that are running right now on that process, which gets us on to the harder question. So hopefully now you've seen that there is a where and there's a difference in the why, and actually there's some complexity there, and just because some markets aren't the same as the ones you're familiar with doesn't mean they'll follow the same path as your market has. But there are still challenges in all the areas that you are working in, as well as the opportunities. What do you think, what are the most outstanding challenges that you see in taking digitalisation forward in the financial markets that you're involved in? Or the other way around, if you want to be half his glass full, what are the really super opportunities? I'm a lawyer, so I start with challenges first because I always see the downside in everything. But feel free to go for the opportunities first. So what is going to hold us back as we go forward?
Okay, so in terms of challenges, I would call them work in progress challenges, right? First one would be standards, and we love talking about standards at ICMA in general. So when we first started working on this concept of a digital bond, right? Basically self-executing contracts and actions on the back of that, we started thinking about what is the data you put into it, right? What defines a digital bond? And actually now I don't have to worry about that too much because of ICMA BDT, right? So I think that is, we stopped thinking about what is a standard, and there's actually one that the market seems to be converging towards. Now, the broader challenge is that if you look at a multi-asset infrastructure that does bonds and funds and structured products and loans, we need to actually expand the scope of these common standards. So that's one. The second one is actually a big one, and that's cross-border, right? So I know there's a lot of work being done with, I'm sure, all of us across this, but what happens if you actually mint a token in Singapore, right? Is it eligible for sale in the UK? Is it eligible for sale in Hong Kong? Is it eligible for sale in Ghana, right? So one of the challenges with this ends up being that you end up building very effective domestic markets, whether that's in fund distribution or whether that's in local rates markets, but you may not be able to expand and get the scale beyond, right?
So you were nodding a lot just then. Go for it.
No, I absolutely agree with you, because that fungibility across borders is so critical. The technology is there, we've proven it can be done, and yet the regulatory nods to move these things across borders is one of the big challenges for us. In terms of opportunities, we don't have the old plumbing systems that you have. It's fertile, there's need-based for it, it's for the investments to happen, it's for the right products that solve needs of our people. Companies or small businesses need to raise capital. They need to raise capital for the full gamut of things that they want to do. So how we use digital tools to make the process cheaper for them, access a more diverse range of investors, global investors, as well as regional and domestic ones. And of course, investors also want to trade in these assets across markets. There's a program we've done. There's a product in Kenya that has been done across 8 markets and should be scalable across markets. So it's getting these regulatory buy-ins to interoperate across markets is, I think, one of our biggest opportunities and challenges.
It didn't take very long in this panel for ultimately the real villain to be exposed. It's lawyers and regulation. It's inevitable any panel that I'm on. But that's a really good phrase there, the cross-border fungibility. I do a lot of work in standards, and that's usually the first level to make sure the technology can talk. But now we have broader fungibility cross-border. How are we going to deal with that? Anyone have a view, apart from getting rid of all the lawyers? How else could we get this done?
Okay, I'll be the villain for a second in this one. We already have fungibility through SWIFT and DTCC, if you really think about it. But I get the point that a tokenized asset in Hong Kong may not be acceptable in the UK, for example, for domestic laws, securities laws reason. So I think that's what emanates, the thinking around tokenized assets. If we stop using the word tokenized and we just call them securities, I think the life will be easier because we have ADRs, et cetera, that operate very successfully in the market today. So there's the cross-border fungibility and cross-listing on different exchanges occurs today in equities, albeit with some addendums, right, to the legal agreements. Now, let's move on to the technology and the possibilities of it, is that the capability to instantaneously visualize your holdings, value them, settle them, and move them is enabled by the new technology, which is either DLT or blockchain. The issue is that in one country, in North America, they're heading towards securities everything, right, based on what the asset class is, right? And there's one primary regulator that is pushing in one direction, and CFTC have another view, SEC have another view. If you go to the Middle East, there's offshore jurisdictions and onshore jurisdictions. Offshore jurisdictions have gone down the commodities path. Anything that's tokenized first goes into commodities unless it has a payment promissory element to it, then it becomes a security. Onshore, no idea. There's all sorts of flavors going on. So the issue is not the technology, not digitalization. Actually, in fact, it's not even the standards, because standards can be written, as you know, it can be really quick. I mean, of course, it takes effort. I'm not diminishing the effort, but I think the equivalence is the issue, that if the regulators understand that tokenized security is a security in Ghana, in Hong Kong, in the UK, and they all agree to similar treatment, I think we'll be fine. I think the rest of it should work.
Okay, so far it's not my fault, it's a regulator's fault. So Aki, what's your view of this?
So I'll touch upon a few things. So one is, scalability. It's important, right? So we have to move beyond one-off sort of issuances. And there is progress that's happening on that front. Interoperability, Abena, you mentioned that as well, is hugely important. And that comes in different ways. So for instance, and this was discussed in the morning as well, again, for an investor to hold these bonds, we have to figure out a way to make it seamless, right? Why should it be any different when I custody my bonds, whether it's a digital bond or a regular bond? It should be no different. If we want to make this inclusive for everybody, right, we have to figure out a way for it to work, for it to interoperate. The bond we issued on Euroclear's platform today, it's open to everybody on Euroclear's platform, but does not connect to Clearstream's platform, and so it does not connect to DTCC. So I think that'll be a huge win, right, if we can get everybody to be talking to each other. Another piece is the use of CBDC, right? So we've been talking about sort of the asset ledger, but we need interoperability between the asset ledger and the cash ledger. And why is this important, right? So I'll give an example. So we, again, as asset manager, right? So we were holding on to this bond. This is just from 2 weeks ago, and didn't receive the coupon, right? And it's from a reputable issuer. So the team sends an email to the investor relations desk at the issuer, and most issuers are very focused on servicing their investors, right? So immediately get a response that, hey, why did you not get the payment? We've made the payment, right? And we see everything was paid on time. So it's like, okay, maybe we'll connect you to our paying agent. So then we reach out to the paying agent, and the paying agent is like, well, we've made the payment. Maybe you should talk to the ICSDs. So we reach out to the ICSDs, and they're like, well, we've made the payment. Maybe you should talk to your custodian. And the custodian says, well, seems like we use our correspondent bank, who has this sub sort of correspondent bank in the local market, and maybe that's where the challenge is. So imagine a world where CBDCs, I mean, if you have better connectivity across sort of from payer to sender, if you can see kind of where a payment is at any given point in time in the value chain, it'll be a huge win. And I have these conversations with banks, and I'll mention like one conversation with a banker, and this banker was not in favor of CBDC. They're like, well, Aki, we have ACH in the US, we have chips, we have all these payment systems. Why do you need CBDC? And it's true. It doesn't matter whether it's CBDC or not, right? As long as we are able to, again, to the point like in Africa, we are way ahead. In India, we are way ahead, where you can make payments over weekends. It's 24/7, whereas in the US, we are still writing checks. So there's a huge challenge and an opportunity there. And then, yeah, I have to mention, Scott, the legal part. So again, in all of these projects we have worked on, legal has undoubtedly been the biggest stream for us, the biggest area where the most work is done. Again, progress is being made, right? So we had issued this under Australian law. The recent issuance we did was under UK law. Other issuers have done it under Luxembourg law, under French law. So over time, I see light at the end of the tunnel where eventually things will get standardized and converged.
Well, that's light at the end of the tunnel is the most positive thing that anyone has said about a lawyer on any panel I've been on, so thank you. Rehan, you look like you're itching to add something then. Were you itching to add something then? You usually are itching to add something.
Not with 8 hours jet lag, Scott.
Okay. Okay. So it's interesting. I'll let you in on a secret. When we did the first transaction with the World Bank, goodness knows how many years ago that was. It was 5 or 6 years ago. We wondered what the benefit was going to be. When it's all done, when we've been through all the investor education, all of these things, what was the benefit that people were going to think was so good they were going to bother to tell the lawyer? We got that out of it, because usually you pay the bill and just make them go away. And it was communication. Like it was the most extraordinary answer. I've seen it in the transactions I've worked on since, and you've just described communication of value. It was communication of information. This extraordinary result is, hey, wow, we can speak to Aki now. I said, you could have done that anyway. You could have used like a chat function to do that. But this enabled the communication of information and value to occur on the same bandwidth. And I'm not using a technical term for that, but I thought that was just so revealing as to how much infrastructure we had created, where just that ability for investor to speak directly with issuer about everything that happens between them was remarkable. I see the same thing happening in CBDC, so thank you for saying that. I'm just going to pause for a moment to see if there are any questions from the audience for our incredibly experienced panel. Going once? Yep.
Thank you. So it seems that nobody is actually talking about quantum computers and what happens when quantum computers come and the DLT and all of these digital payments effectively can be override and, historically, and create quite a lot of damage. Has anyone from the panel even thought about it or has any views on it?
Well, I'm launching a crypto custodian very soon, so yes, this has been asked. And the simple answer is no one in their backyard has a quantum computer ready to go today. However, let's take an example. One day quantum computers are a reality. The current encryption ciphers, and I'm sorry, I'm going to dig into some technicality. Given that you asked such a technical question, maybe I'll indulge you guys.
You have license, go for it.
Yeah, sure, okay. So today in cryptocurrency world and digital asset world, the ciphers that are used to store the keys that are used to sign transactions onto the blockchain are secured in a way which takes a number of years, hundreds and thousands of years, by a normal computer to crack. If a quantum computer which has the right amount of qubits and has the right conditions on a particular day in a particular year, that could crack it within a microsecond. Now, those kind of computers are accessible by a few handful of entities, one corporation and a couple of governments, allegedly, right? But then you have to look on the flip side, that when somebody has a quantum computer, they won't go after my crypto assets. They're going to go after national infrastructures first, right? If they want to be destructive or they want to steal things. So we will have a bigger, more monolithic problem in the world where somebody's actually misusing that technology. Yes, somebody may crack it one day and take 20 Bitcoin out of the wallet, but then guess what? The amount of money and effort they've actually put in, which is millions of dollars, billions of dollars to some extent, are they going to really take away 20 Bitcoin out of my infrastructure? Are they really going to just break something that is reconcilable by another node? Economically, it doesn't make sense. However, let's extend that for another 30 seconds. Say somebody actually does that. With the blockchain, the beauty of it is that the reconciliation, let's leave crypto aside for a second. The nodes are extremely resilient. If you break one node, you break 100 nodes, those nodes can come back online with the same amount of information within a much faster rate than traditional infrastructure can, right? So they are quite resilient. I mean, look at the Ethereum network. I was looking at the performance of it over the past year and a half. It has been down 0%, right? And there are threats out there, including a quantum computer, allegedly. And there are millions, billions of dollars sitting on those wallets, so no one's attacking them with a quantum computer today, and I wouldn't think it'll happen in the future. But if we had a quantum computer that we were using as a commercial organization, or we had access to it through a research facility or another corporation, we would be actually using that quantum computer to create the ciphers that is unbreakable again. Right? So the compute power that goes into creating a cipher will be used to create the same cipher protection with a quantum computer as you would use to break it. What that means is it's an exponential leap for somebody to break it again. Yep.
Okay, does someone have a question that's not technical?
Great panel, thank you. Just the point about equivalency. It was unpacked that that's the real issue, I guess, to do cross-border. And someone was talking about that in the US it was heading, I think, into securities. And in the Middle East there was a distinction between onshore and offshore jurisdiction. I didn't quite catch that. Could that please be repeated and just unpacked a bit more? Because that seems to be a really crucial point.
Okay, sure. I'll give you an example of the UAE and Qatar, for example. So UAE has two main jurisdictions that are quite active in promoting digital assets as an ecosystem. So one is called Abu Dhabi Global Markets, and the other one is called Dubai International Financial Center, ADGM, and the IFC. Both of them have digital asset rule books. Onshore, there's a regulator called SC or ESCA, and the UAE Central Bank. Between ESCA, so ESCA can be seen as an SEC of the United States, right? And the Fed is the UAE Central Bank. They have rules around onshore, as in within country activity to retail investors, right? Both on the retail payment side, institutional payment side, as well as on the security side. The two offshore centers are more related to international rules that are based on common law jurisdictions, because onshore there's no common law, whereas in offshore there's English common law applicable, right? Qatar has QIFC, Qatar International Financial Center. They have exactly the same setup there, that they have an offshore jurisdiction. The difference is that those offshore centers are legislatively independent. They have their own courts, they have their own bodies that are run for rulemaking and approving on those rules. And in fact, actually, if you look at Abu Dhabi, ADGM, they have their own courts that's presided by Lord Hope in the UK, and all the presiding judges in Hong Kong, Singapore, Australia, and New Zealand, the High Court judges are actually on the bench of that particular court. So they're set up in a way that they can arbitrate and pass rules on a global scale from those centers. This is why they're able to bring together so many regulators in a single room and legislate faster on digital assets compared to some of the other jurisdictions. If that makes sense.
Okay, so hopefully from this discussion you've understood that there are a range of perspectives, but there are some common themes amongst them, one of which, of course, is the fact that lawyers cause lots of problems. Now, I want to finish with just a particular comment, and it's on the Bali FinTech agenda. So endorsed by the World Bank and the IMF, and it has at its heart open accessible foundational infrastructures, the development of contestable markets, financial integrity, and resilient digital infrastructures. It also, really importantly, contains a significant element of promoting international collaboration, encouraging the sharing of information, and strengthening the coordination between countries. In my personal view, that's also a mission statement for the ICMA in this particular area, and hopefully you've seen some glimpses of that in this discussion. Now, with that, I'd like to thank our wonderful panel who have travelled ever so far and in the usual way. Thank you.